That's the strategy. You're going to save money. If it hits $1 over the next 6 months, you're going to get $1. If we start off at $1.50, but it shoots up to $6, you're protected at $1.50. So I wish more people would understand that leading up to the mortgage renewal. That is a massive strategy where you can really capitalize on partnering with somebody with the right amount of experience.
Dereck, thank you so much for taking the time to be here today. I know you're busy and I really appreciate for you being here. And we decided together to talk about like mortgages, renewals, maybe home equity, working with self-employed people, because we know sometimes can be a bit of challenge, and maybe the misconceptions, because normal people might have some misconception about mortgages. But before we dive in, do you mind introduce yourself to the audience and tell us a bit about you, your background, what you do?
Yeah, no problem. So Dereck Landry, born and raised in Kitchener, Ontario, and married, have 3 kids, 2 daughters and a son. I'm a girl dad and a boy dad. Been doing mortgages since 2008. So I guess 18 years and counting. I believe I became a broker, a licensed mortgage broker back in 2011. And yeah, so pretty much seen it all. And but never expect that something new won't pop up. There's every situation seems very unique, but yeah.
So what inspired you to become a mortgage professional, if you don't mind me ask you?
A good friend of mine, John, he was already in the industry and talked me into it. Good guy. He's still a mortgage broker, successful mortgage broker in the region. And yeah, I learned a lot from him and then kind of branched off, but we're still friends to this day.
Nice.
I was in his wedding party. He was in my wedding party. So just one of those things where one of your buddies like, hey, I think you might like this, and never look back, really.
Nice. So. Nice. That's a nice story, actually. And just you mentioned you are doing this from 2008, and you saw so many, I mean, like ups and downs, different rates.
That wasn't an ideal time to come into the industry, as I'm told. So it's kind of like, it would be similar to coming into the industry now with the downturn that we're seeing. You know, things aren't exactly popping. So without having a database or that book of business, existing turnovers, renewals, it would be quite the challenge, I would think, for someone new to the business right now, whether it's real estate or mortgage financing. I'm sure there's challenges in both fields. So, yeah.
I know. If you look back, what would be the perfect timing for you as a mortgage broker? If you would choose 1 year or a few years, what you would choose?
What was the turning point? Kind of like the mortgage TSN turning point? I'm not really sure. I guess just pounding the pavement. You know, the first 2-3 years are always going to be a little bit slow and rough, and then just working hard and just eventually you have to kind of be obsessed with your job, realistically, to be successful. Pounding the pavement and making relationships, maintaining relationships, never assuming.
Yeah.
You could have 3 to 30 real estate relationships, but never assume that those aren't going to be gone tomorrow, right? They need to be nurtured. Every relationship in this industry needs to be nurtured, I think, and never be afraid of making new relationships, because put yourself out there. Don't just work on in your business, work on your business, right? So just put yourself out there, let the world see what you have, and keep working hard.
I like that. And like you said, you need to be obsessed. And I agree. I'm the same. And when I said I am obsessed, also, I have priorities, right? So if I want my business to be successful, I need to make sure I have my priorities, listed and focus on the business, because we get distracted so easily. And these days it's so easy to get distracted. And you think like, oh my God, this is just 5 minutes, but it's not the 5 minutes. It's the mental state, because when you shift your focus, it's not just the 5 minutes. It takes, and this is scientifically actually proven that you need about 20 to 25 minutes to go back to the same focus you had before the interruption. So I am like with you on the same with the obsession,
Yeah, that's good.
an obsession in a good way, not necessarily obsession like I don't want to know anything else, but no, but obsession means like I decide I want to be, this and a professional, and I will do my best to work,
Yeah,
like you
it's good.
said, on the business though.
I think the same thing can be said for your clients too, right? Don't assume, I have all these clients that I'm working with. You should treat every one of your clients like your only client, your last client.
Oh yeah.
Don't assume you're never going to get another one, really. But that's how you. It's
Yes,
hard to do, but it's
it
really good
is.
to act or have that mindset, I think. So
But I think this is our customer service as well, and that's what makes the difference between us, maybe other, in my case, agents, the way I treat my clients. Because let's be honest, we can handle paperwork. I mean, paperwork is not like a rocket science, but the way you treat your clients and be able to listen. Because sometimes we think like, oh my God, same situation I had before, but honestly, no, it's not.
yeah,
I think every single single client is different, even if you will see like similarities between situations, but it's like a trap, because then you are not thinking, you're not creative, you're not helping. And I think it's the same for you as well, right? I mean, everybody like needs mortgage. Oh, let's just do, but it's not right.
yeah. It's really good to have those conversations up front with your clients. We
Yeah.
have a heavy emphasis on KYC, know your clients,
Mm,
and having upfront expectations set. And it's
mm,
not just a matter of like, as you come into the industry, it's like, oh, I can get you approved for this much money. This is
mm-hmm.
your maximum mortgage amount. It's kind of a flex, but it doesn't
Yeah.
really stop there. That's just a starting point. And, you need to say to your client, okay, so I can get you qualified for $1 million mortgage.
Mm,
What's your comfortable mortgage payment per month? Where do you see yourself in 5 years? Are you going to be making more money, potential for layoff? And I
mm,
have oftentimes where clients, their income will get them qualified for a higher amount than their available down payment, or really where their comfort level is for that month-to-month cash flow, right? So those are just all conversations, expectations up front. So yeah,
yeah. No, I totally agree. Talking about misconceptions, many people think getting a mortgage is simply just about finding the lowest interest rate. What
right.
should they really actually paying attention to? What's it's more than that, right? I'm assuming it's more than that.
Well, yes, it is. So there's so many. It depends on the type of product too. So if we're
Mm,
talking for a purchase, if your conversation is revolving around interest rate, what's your lowest rate? Someone calls you have to call the office all the time. What's your best rate? I'm like, well, there's 15 different rates. I don't know. Where do you want me to start? And so it's kind of funny that way. Nobody. But if those conversations are strictly revolving around rate, they don't usually go anywhere. So it's the people that are more, they understand or appreciate that you're a solutions based mortgage broker,
yeah.
and how can I get you, whether it's a refinance or a purchase, how can we get you from point A to point B to
Mm-hmm.
achieve your goals? Because 100% of nothing is nothing. So if you don't get that house at the end of the day
Mm-hmm.
because you're still waiting on your financing condition to clear and you had to, pass it up, that's not doing you a good service, right? So oftentimes we'll find lenders with the lowest rate have 15 to 20-day turnaround times on financing. So we don't want to place it there. And realistically, we're talking like 0.2 of a point, right?
Mm-hmm.
So is this house worth you losing out on because you wanted to save 1/10 of a point? At the end of the day, it's just setting those expectations, I guess. So it's
Mm-hmm.
not always about lowest rate. It's more, what I see more of is refinances, equity takeouts, so we can there's a heavy focus on monthly cash flow, right? Especially
Mm-hmm.
in this day and age, all these mortgages that are coming up for renewal and the interest rates are doubling. How can we get that payment lower than what they were paying in some cases, consolidate all the debt? But then we get into another issue of equity. So the values have come down. So there's the most amount of mortgages that are renewing in
Mm-hmm.
2026. But there's a whole segment of mortgages of people who bought 5 years ago, put 20% down, and now their values are more than 20% down,
Yes.
and they're stuck with that lender, right? We can't move those mortgages. So yes, there are a lot of mortgages, but how many of those mortgages can we actually move? I don't have the statistics on it, but I'm guessing it's at least 15% that they're stuck, minimum.
So they need to know this is not like a black and white,
No.
answer, or like, and it's a lot of education aspect, right? You have to educate people because they are getting information from different sources, like often like their family, their friends, Google.
Yeah. Oh yeah.
But they're missing a lot of information, and this is why it's great. You can actually provide them with the customized service. It's because yes, otherwise we would be only on the internet. We will use AI, but we need a customized service and which fits for us. And like I said, you don't want to be stuck at a certain point and you don't know what to do next.
Yeah, and the thing is, so if you're going to get your haircut, you're not going to partner with someone or go get your haircut from somebody who has a year experience or a month experience. That's where experience does actually matter, because we've seen so many different situations. We've built so many different strategies for multiple situations. So the mortgage renewal situation, I get repeated calls from people. My mortgage is up for renewal in 2 weeks. This is the rate they offered. Can you do better? And sometimes you can, right? And rolling the dice and opening that mortgage renewal letter and hoping for the best. That's not a strategy, right? So we can get in 6 months early. I'll compare it to buying a stock. If you know in the next 6 months you're going to buy a stock for whatever stock it is, I'm not a stockbroker, I'm a mortgage broker, but I'm going to compare it to that. And I can guarantee you the lowest stock price over the next 6 months, that's the strategy. You're going to save money. If it hits $1 over the next 6 months, you're going to get $1. If we start off at $1.50, but it shoots up to $6, you're protected at $1.50. So I wish more people would understand that leading up to their mortgage renewal. That is a massive strategy where you can really capitalize on partnering with somebody with the right amount of experience and a good 6-month rate hold, which I have as well. So it's not to say the people that roll the dice are going to lose out every time, but it's not a great strategy, right? It's
I know.
You're hoping for the best.
Yeah. No,
you get what
it's
you get,
not.
and you don't get upset, so to speak.
I know.
So, yeah.
One of the most common questions people ask is, how much can I qualify for? So in this situation, what factors actually determine the number? I'm pretty sure you're getting this question, right? So what happens?
So
people
for
are
a mortgage,
saying,
for a purchase?
Yes.
Okay, so the starting point for pretty much every file, I would say, is credit, right? Credit will determine. So it's either, when it comes to credit, I often hear it's a valid question where clients will say, I have really good credit, so does it help me with the rate, right? And it won't. So either the top tier, the A status, it's either a go or a no go. There's a minimum you need to enter that threshold, but having perfect credit versus 800 versus 900, that's not going to affect anything, right? So when we check your credit, we can see how many debts you're carrying, how many car loans or whatever that is, and that all comes into the factor. So that's why checking your credit is very important. We get to see your credit score and what is inside of that credit score, as far as your debts goes. So once that's established, the next biggest thing would be your income. Are you self-employed? Are you hourly? Are you salary? And typically hourly salary, we're going to take the greater of your guaranteed salary or guaranteed hours or your 2-year average on your T4s. And then it's available down payment. So if you have 20% or less, you're in the insured category. And if you have more than 20%, we have a lot more flexibility with Alt-A lenders. The alternative lending space, it's often referred to as a private mortgage, but that's not the case. So it's based, there's A, Alt-A, and C, or private, right? Kind of, it's tiered, it goes down like that. So, yeah.
So if we have like 20% or more, we're getting more options. That's correct. That's my understanding. Okay.
Yeah.
Okay. Mortgage renewals. And I don't know, do we talk about the elephant in the room? We are seeing people, they bought their property back in 2021. We know the prices back then. Um, if they need to sell, if they cannot afford the mortgage right now, the problem is might have to come, you know, with some money to. Are you seeing
Yeah.
these scenarios now? Because I'm seeing like people are like stuck. They have $1,200,000 property bought 2021. Maybe it's 900,000 now, and but they have a mortgage. So even if they're selling the house for 900,000, they still have maybe 100,000 or more.
Yeah, that's a whole category of mortgages that are coming up.
Mm.
I don't know what the statistics are in power of sales in the region, but I'm sure there's an uptick there from what I'm hearing. I don't know if you've seen any as far as listing
Growing,
goes.
unfortunately, yes.
Yeah, so I wonder if rates come down further, if it will have an uptick or some upward pressure on prices. But
Yeah.
I'm not 100% convinced. It's more of a confidence thing. There's a lot of job losses.
Mm.
We did see an uptick in the jobs numbers, but it's your typical seasonal
Mm.
summer jobs. So we'll have to see how the dust settles after the summer at the
Yeah.
next meeting. But I do truly believe that we're going to see rates just hold for the rest of the year. I don't see any uptick or downward. If anything, maybe down. But again, I don't want to pretend I have a crystal ball. It's impossible
Yeah,
to
we don't have a
predict.
piece of that's thing. I saw yesterday
Yeah,
announcement from Bank of Canada. They are holding the rates. So
yeah, yeah. Core inflation is pretty good.
mm.
Yeah,
Yeah.
so we'll see. But variable rate's still a good bet as far as
Okay.
not to get off topic, but yeah, it still continues to outperform fixed rates by at least a half a point,
Mm.
whether it's insured or conventional. So that's pretty good
Okay.
if you can stomach the 8 annual meetings. So
That's the thing. That's the thing. I know. And I actually, my husband and I, we have and like 3 years ago, ooh, it was our actually a second property, and
oh
it
yeah,
was anyway.
that's a really good topic to
Yeah.
have because a lot of people are in bank variable rates, right? So it's a
Mm.
static payment. So that payment won't change. I have a lot, I don't want to name the actual bank. It might be green, doesn't matter. But a lot of those clients I have, they're coming up for renewal
Hmm.
and the balance hasn't changed. It's almost exactly the same as it was 5 years ago. And that's because even though they reached their trigger point, they weren't forced to make a lump sum payment or adjust their payment. So you have to be very careful. And again, some people might be okay with just paying interest only because that's what it becomes, a 48 or 50-year AM,
Hmm.
which is effectively interest only. And that's why those balances haven't moved. So if you partner with a mortgage broker, we can have these conversations. We have access to monoline lenders where that mortgage payment will fluctuate with prime. So
Mm.
your end result should be very close to where you started off with, regardless of how prime fluctuates. So your payment will be adjusted on the first of the following month,
Hmm.
up or down.
Oh
So
wow.
yeah, yeah.
Okay, so that touches a little bit my next question regarding equity. If you can, I know this is a topic we can actually have a session alone on
On equity.
yes, on equity. But if you can give us an overview what equity means, how we can use it, how it's affected, and so on.
Well, this is the biggest challenge in the mortgage industry right now is lack of equity. If you have equity, so here's a good example.
Mm.
Your mortgage is coming up for renewal, you're in a situation where you're not old enough to qualify for a reverse mortgage. You have a lot of equity and you just need to hit the reset. You've both
Mm.
been laid off. One person's been laid off and you just can't make those payments. We have lenders. I have access to lenders that will just do an equity type of a loan where you don't actually need to qualify for it. And we can make it so you have no payments for the whole year. Instead of
Mm.
selling right away, sit back, see if you can find another job, no payments for the year. And that's where you have enough equity to do that.
It's good
it's
to
not
know, though. It's good to
it's
know.
yeah, it's not cheap, but there's alternatives out there. The more equity you have, the more options you have. Just like when
Okay.
buying a home, the more down payment you have, the more options you have with
Mm,
your ratios as well.
mhm,
Um, yeah, so building equity, maintaining equity, it's not easy in
mhm,
this day and age because I think a lot of households are over leveraged as it is going into this downturn. There's a lot of mortgage debt, household debt going into this downturn,
mm,
and now it's making things very difficult. We
mhm,
see it on appraised values. You probably see it on your list on
mhm,
listings. One thing that's really surprising to me that I haven't seen before is the gap between Waterloo average prices and Kitchener.
mhm.
That gap seems to be growing
Yes,
by
yeah,
a lot. I don't know. I can't put my, I'm not, that's not my area of
yeah.
expertise. And I know there's pockets in Kitchener
Mhm,
and pockets in Waterloo that are going
mhm.
to outperform each other. But yeah, it's
Yeah,
interesting.
I know.
Twin
No.
cities.
Twin cities, but hey, not so twin, not so
Yeah.
much twin. More like siblings than than
Yeah.
twin. I asked my previous guest about self because I know more and more people are under contracts, they are self-employed. What is your opinion? Like how hard it is to get a mortgage if you're not a regular ideal candidate for the bank, have a steady job, 9 to 5. So yeah, what's your take in this with
If
us?
you're self-employed.
Mm-hmm.
So the self-employed criteria, they want to see that you were licensed at least 2 years in most cases, right? So whatever you do, whatever the industry is, if you're showing income for the last, you don't have to have 2 years of tax filing. So this is where there's insured programs. And there's all, if you get into the conventional side, someone wants to buy a house, like I have at least 20% down. That's easy. But the challenging one is when somebody wants to enter the housing market,
Mm-hmm.
they're self-employed and they don't have 2 full years of tax filings. They have good credit. They probably have 5% of savings or 10% down in that area.
Yeah.
Um, but there's programs through say Sagan or the insurers that will recognize people who are newly self-employed and
Mm-hmm.
kind of allow you to. It's not a stated income program, but kind of like to responsibly project whatever industry they're in, where they are today, what they filed for, and where they think they'll end up for the next year or the current year, right?
Mm-hmm.
And then there's another program that will also recognize if you transition from hourly
Oh,
or salary and then decided to become self-employed. So let's say you worked in
okay.
IT and you
Mm-hmm.
were you were salaried for 3 years or a year, and then
Okay.
you just have one tax year of filing as a self-employed individual. They'll recognize that. Well, you're newly self-employed, but hey, look at this. We can connect the dots from A to B. That's another interesting
Yeah, because they worked
product
in
as
the
well.
field for 3 years, so they're not starting something new. It's a new career. So
Yeah, newly self-employed, but not
mm-hmm.
necessarily having that 2 year two
Mm-hmm.
years of experience, 2 years of tax filing, right?
Yeah.
So
Oh, thank you so much.
yeah, people shouldn't shy away from self-employed. People, I know a lot of people will shy away from it. It's just more of
Mhm.
a challenge. There's, oftentimes there's more paperwork. Well, for anyone, I don't want to say anyone, but doing a salaried application versus a self-employed individual. Yes, you just need to know how to prepare for it and not to scare the client. That's for sure.
Yeah.
So, oh, you're
It's good.
self-employed. I don't know.
Yeah,
Come
it's
on.
good to have options, though. It's good. I
Yeah.
mean, like this conversation 10 years ago would be, yeah, probably more challenging to find, how we can qualify as a self-employed for a mortgage. But now I think it's more like open.
Yeah. Use a
The lenders
broker
are more open
or a
on.
mortgage agent, experienced mortgage agent. There's
Yeah, yeah.
a lot of good mortgage agents out there as well. So, and that's one thing that's kind of funny too, is that everyone seems to be a mortgage broker these days, even though they're not. And people, that's just like I think it's because it sounds nicer. People are like, oh, call my mortgage broker. Like that's a mortgage agent actually. I get a kick out of that, but
Yes, to
it's
be.
funny.
Yeah, I know. It's more than. Okay, if you could leave our audience with one piece of mortgage advice that could potentially save them thousands of dollars, what would it be?
I would say maintain good credit. keep your credit card balances. So it's all about utilization, credit
Mm.
utilization. So keep them under 50% if you can.
Mm.
Pay them off if you can. In a perfect world, don't leave your credit cards stagnant. And if you have, a lot of people, it's almost like they feel satisfied by closing a credit card. But if you have, let's say you open a new credit card and you close out one that you've had for 5 years, maybe talk to a professional before you do that, because
Okay.
closing a good bank credit card or healthy trade line credit card, you want to maintain the ones that have been open the longest. So that's going to help your credit.
Okay. It's good to
And
know.
just keep an eye on your credit.
Mhm.
Avoid collections. If you have collections, pay them right away. Not even worth negotiating. Don't negotiate a lower amount, because
Mhm.
that won't help you either. So just stay on top of your credit scores. Maybe sign up for the free monitoring.
Okay.
But well before going into an offer presentation, discuss your credit situation with a
Yes.
professional.
Yeah. Otherwise, it's
Yeah.
waste of time for everybody. Like, I know.
Yeah, and I've worked with people for 18 months to repair their credit. I'm like, I know you want to buy a house, but you're not there right now. You have limited down payments, so we need
Yeah.
to meet the insurer guidelines.
Yeah.
This is what I'm recommending, right? And
Yeah.
it works if they follow it. So
Yeah.
usually.
Oh my God, thank you so much. But before I let you go, where people can find you if anyone wants to connect with you?
I'm on Instagram, Dereck Landry Mortgages, but my office phone number is 519-208-4145. And they can send me an email,
Okay.
derek.landry@migroup.ca.
Perfect.
Yeah.
Nice. Thank you so much for oh my God, valuable information. And I hope I will have you again. I don't know.
Yeah, it
In
was
some
great. Yeah,
time,
thanks for
but
inviting me.
maybe we can dissect each topic we had today, because each topic is actually an entire podcast. So
We'll do a
yeah,
podcast from the golf course. No, I'm just kidding.
I would want that actually. Okay, thank you so much. Thank you so much.